October as they continue to buy the treasuries. We're at 2.17% now. And look at the VIX. I've asked him to build a one-year chart of the volatility index, the fear index, which is now at 20. But we are, even with this sell-off, nowhere near where we were in the August sell-off.
The point is we've had 3 days of mild, what seems like mild panic, but it's not being reflected either in the volume or in people going out buying protection. Of course, the VIX representing people buying puts and calls in the S&P 500 for the next 30 days. It's not there. I call the desks. I say, are you busy? And they say, no. I said, we're down 250, 300 points in the Dow. You're not busy? Bob, I'm telling you, this is more like a buyer's strike than people panicking coming in and saying, oh, I want to sell. We're not seeing that on the desks. And as you know, one of the hallmarks of a capitulation bottom where we can say, okay, this is the end of it for now, is heavy selling, which we're not really
Or heavy
seeing.
volume.
Heavy volume, excuse me, yes. That's technically.
That would be what we watch for.
And the VIX is not indicating people are desperately rushing off to buy protection at this point.
Thank you, Bob. So we're going out well off the lows. We were down 300 at one point, down 250 right now. The New York Times is ringing the closing bell here at the New York Stock Exchange, and over at the Nasdaq, it's Pathway Genomics. Stay tuned, much more coming up on the second hour of the closing bell with Kelly Evans. See you tomorrow, Kel.
Thank you, Bill. Welcome to the closing bell, everybody. I'm Kelly Evans. Look at these markets. Another down day on Wall Street. The Dow giving up almost 250 points. The only thing you can say about it is that it could have been worse. It was earlier in the session. We were down more than 300. Still another decline as we're in the third trading session of the year. And for the Nasdaq and the S&P as well, we are putting up a string of declines that looks to be the deepest since we started the year in 2008. Better than 1% drops across all three major averages today. And take a look at oil. Many people pointing the finger right here for a lot of what's happening. Further pressure across the WTI benchmark and Brent as well. And we're talking about settles lowest since 2004 for the international Brent contract, lowest since 2008 for WTI there below $34 as we look at it today. Joining today's panel, we do now have our own Mike Santola here, along with the CNBC contributor Carol Roth. Welcome, guys. For more on today's market action, fast money trader Guy Adawi and Chris Constantinos from Riverfront Investments, all here to try to make sense, Mike, of just how weak a start we're seeing.
It's kind of amazing. The pattern seems to be in the first 3 days. The rest of the world under stresses from multiple directions and terrible headlines wants to sell assets. They sell overnight into the morning. We have this low when the European close happens here, and then you get some bids late in the day. I don't know if this is really something we're going to be able to rely on, but to Bob's